Hey everyone, welcome back to the Mark Loeffler Experience. It's that time of the month. We got market update time. We're going to talk economics. We're going to talk all sorts of fun. I got Andrew Hines with me again. Welcome back, Andrew.
Hey Mark, thanks for having me.
Everybody keeps smashing the like button for Andrew. So I think we had about 250 likes on the last video. We're almost at 10,000 views. Appreciate it. Smash the like button for Andrew. Subscribe. If you guys are new to the channel, you're just finding us. We're all about wealth building, Canadian content, apartment buildings. We're going to start doing some stuff out in Alberta as well, where we're going to analyze some properties. So if you guys are interested in that, please subscribe. Also, go check out Andrew's channel. He posts one a week with Canadian content as well, and we'll post that link down below. All right, well, let's get into it. So obviously we're in January. Market ended up huge in December.
Yeah.
Like there's some that are 20, 30% year over year increases, right?
Yeah, there are a couple. I mean, you know, the bigger cities that were pretty expensive, even Greater Toronto area is up. I think it's over 10% as a whole. So we are seeing it across the board. I mean, one of the things in my research that I noticed, and we'll probably dig into it a bit more, is, you know, provinces like Saskatchewan and Alberta are fairly normal now. I mean, aside from April and May, the trend really normalized. You see prices coming down towards the end of the year, pretty consistent active listings versus sales happening. And then you've got your outlier markets like Montreal is extremely hot. Halifax is crazy hot, and I think that they're about due for a big price jump.
Well, also some smaller towns in Ontario, like Bancroft, right? Like Bancroft it was silly, 30+% year over year. And obviously these had more room. Yeah. You know, a $60,000 price lift in Bancroft rather than a $60,000 price lift in Toronto is massive, right? Like it's
and I like how you put that, more room. That's really key. Like you look at the cities, which cities have room for growth against Canadian incomes. That's really what it comes down to, affordability. And the cities with the most affordability, and I know we've spoken about this before, those are the ones I think are poised for the most growth within reason, right? You get too far out in the boonies where there's no access from roads, those are going to be delayed. Doesn't mean they're not going to go up. They will. Like even you mentioned that town near Haliburton all the time, where you have your cottage.
Oh, Havelock.
Havelock.
It's not near. It's more near Peterborough. But
okay, yeah. So more near Peterborough.
You're going to get angry comments, like I get angry comments when I mention Ingersoll and I mentioned something with Sean Allen, and people are like, "Well, I'm in Ingersoll." I'm like, "Well, thanks for watching."
Yeah, your inflammatory comment on that video was quite enjoyable.
Yes, I thought so. I mean, I thought it was funny. Let's talk national statistics. I know you want to and we'll talk about what we think is causing this and where we think this is all going in this year type thing, right? This is January. You know, we're gonna give you again our predictions, and we're gonna see if we're right at the end of the year.
Yeah, for sure.
National home sales actually went up in December again, 7.2%. Activity for the year was up 47%.
Oh, so that's just sales. Okay, so sales activity. So that's across the entire country.
That's across the entire country. Yeah. This is CreaStat. We'll post the link. You guys can go there and you know, if you want to geek out on it, go nuts, right?
That's pretty wild. And I know we've talked about this before. I think that's the interest rate bump big time in there. We're seeing a big bump because of that.
I mean, what were we getting last year at this time? Like we were getting interest rates of
3.5. Prime rate was such that you'd be paying like 3.95 on your line of credit, you know, something like that.
Yeah, and I think I have a prime minus 0.9, and I think variable rate mortgage, and I think I was like 2.4.
Yeah, so
and now I'm like 1.1.
You're 1.1. Oh wow.
Yeah, something like that. Or maybe it's 1.35.
I've got a couple under 2. Yeah, like my prime rate dropped and now I'm under 1. I used to be up, you know, even over 3. And so we've seen, I believe we've seen a full 1.5% drop on prime. Yeah, which is huge.
And basically they're down 50%.
Yeah.
Like you can easily go out there and get a mortgage. I think they're like, obviously HSBC is advertising less than 1%. Yet I know like people are getting 1.5, 1.6% pretty commonly right now.
And all that does is increase buying power, and with no extra supply, it's not that it's really saving Canadians money. Not on the buy, it's saving people who already own real estate and aren't trying to buy more. But for those trying to buy more, it's not really saving them money.
Well, exactly. And basically what that means is people look at how much they're spending on a home, yet it's not how much they're buying it for, it's how much it's going to cost them monthly, right? And that's the biggest driver, is that now they can buy these houses same house, and it's going to cost them the same amount monthly because interest rates are so low.
Interesting thought on this, not to get too tangent, is, in the States, they've got 30-year fixed mortgages where you can actually lock in. We're undoubtedly going to come back to this inflation topic, but when our government now has to adjust, and typically they use interest rates to control inflation, are they going to be able to do that with Canadians and their current level of affordability? That's definitely something we could expand on a bit more.
I mean, we'll dive into that in a couple of minutes. So if you guys are really interested into the inflation topic, I'll make sure I put like the time we're going to do down below, and you guys can skip over this whole thing and go right there. But I mean, I wouldn't do that because you're going to miss gold.
Yeah, we pepper the gold in.
Yeah, we pepper the gold in. Yeah, you never know. So average sale price year over year from December to December across Canada was 17% increase.
That's wild. Yeah.
That's just, 700,000 units in December. And usually December is a bit of a slower month where we see inventory coming off the market because you get into Christmas and holiday season. People don't really want to list over those times. Yet we haven't really seen that.
Well, I mean, I think originally the theory was the sales missed out from April, May, just got pushed back later in the year. So that certainly, I think you can see that in certain cities. Yeah. Other cities, it's just like they've gone wild. And again, I think Montreal is one of them. I think Halifax is another one of them. Vancouver, not so much. Toronto, not so much. They're starting to follow the normal trend now.
Yeah. Well, and it's interesting because, I mean, obviously Montreal's in lockdown right now, right? Yeah. Or in curfew.
Yeah.
But the market's just, and we're in lockdown here again in Ontario, and yeah.
Well, I mean, they are in lockdown, but I think, again, it just comes back to affordability. Like Montreal compared to Toronto and Vancouver, the price was ridiculously low, and now I think it's just leveling out.
And I think what we're seeing, I don't know about Montreal specifically, I wasn't able to pull this data, but I know that in major centers, it's the downtown is dragging down. So downtown Vancouver, which used to be the catalyst for driving the market, now people are now moving farther afield. Toronto's happening a little bit in Hamilton, not as much, but I know Ottawa. I was talking to Tony Miller out in Ottawa, and he was saying, the downtown, it's really dragging down the market, like even rental and sale market, right? And people are going to the outskirts.
Yeah, we talked about this before, but just for anyone who hasn't seen that video, so the main take I have on that is no benefit to living downtown and you were paying a premium, right? People were paying 20-30% for a condo downtown versus, on the outskirts. Why would you want to be downtown when you can't use your gym, you can't use your pool, you don't have a backyard? If you're going to be locked in your house, you're going to want a backyard, you're going to want some space. So I think that's a big driver here. Why spend more? And if we were to pull up the rental stats, we'll see that too. Rents are way down downtown. It makes logical sense. And I always like to bring this back to where's the logic in this? And if we can make sense of the logic, now we can start to make some more accurate predictions.
100%. All right, well, let's get into... All right, so this is Toronto region. And again, so for Vancouver, I mean, let's start west and then we'll move over. So Vancouver region, again, first-time home buyers, it's multiple offers. The higher price homes. I mean, this is from my buddy Matt Bastian out in Vancouver. He's a good realtor out there, and he's basically said that first time home buyers, you're in a bidding war. There's no inventory,
and that's more just based on price point, right? The more accessible price points are getting sought after the most, right?
Yeah, that's exactly it. So he's saying there's a lack of inventory. Obviously in the higher priced areas, you're still. And we'll go through that just through in Ontario, just from the Toronto Regional Real Estate Board, which obviously gives us some great stats. Yeah. And we'll see that here too. Okay. I think, right? And then I was talking to my buddy out in Calgary. He's saying the exact same thing. He's saying downtown, kind of hollowing out. Yeah. But on the outskirts, first-time home buyers up to like $600,000-$700,000 is starting to really pick up.
Now their average price in Calgary is still quite a bit down from the 5-year average, right? Yeah. So it's much more a normalized market. To me, it seems like actually a really stable market.
Well, who knows now, because Joe Biden just announced today that he's going to cancel Keystone. So I don't know how much that's going to affect.
Yeah, what that'll affect them. Yeah.
Yeah. And, if we have any politicians watching, Canada, we do rely on energy. So if we can get a pipeline in Canada and process our own Canadian crude, that might be a good idea. Just saying. Just putting that out there.
Just floating that out there.
Just saying. Keep taxes in Canada. All right. So Calgary, I mean, we're pretty much seeing that across the prairies and into Ontario.
So yeah, just looking at the sale price here, if you go into towns, I was actually surprised to see that they're down because you would think they're more accessible, but the condos are actually up year over year. So I was pretty surprised to see that. Not all of them are.
And the smaller condos, right? Like it's not.
Yeah.
I don't know the market that well, so I don't know if it's micro condos or not. But it looks like 1 bedrooms are up 3%.
Well, yeah, studios are
quite
up 5%.
a bit.
I mean, I think that just goes with more accessible, right? Because BC's pretty expensive overall, so that might be one of the more affordable price points overall.
Yeah, for sure.
Yeah.
And then just on an inventory front, I mean, you're seeing sales of what, $750 a month, and then you're seeing inventory really just drop. And it's expected this time of year. We live in a country called Canada, and we have winter, so people are less likely.
They don't want to move.
They don't want to move. Although I mean, it's warm right now.
We've been doing okay here.
We've been doing okay.
Generally speaking, well, in Toronto, the last couple of years, you didn't really see a drop on the downtown condos, because I don't know, maybe it's people aren't as worried to move when you're in a condo.
Well, they can just walk down the path.
You walk down the path, walk down the hallway. Yeah, that was the main thing. I just wanted to show that condos are actually starting to do better in Vancouver, which, I was surprised about to see that, because I really did think we'd see an exodus, a continuous exodus from the core until we can fully reopen.
Yeah.
But we're not seeing that.
So we had Andrew on who from Toronto Condos, and I was chatting with him, and he was basically telling me that they're starting to see that like it's kind of on the uptrend again, right?
Yeah.
So, and he called it on the thing. He said we'll start to see it pick up in January when people start to say, "Oh, well, that's a deal."
Yeah, and I think there's some stats that are starting to signal that. Now we don't know for sure, but if we go into the House Sigma data, actually starts to show that we're trending now towards a more balanced market in the condos downtown.
Yeah, but yeah, and basically, so this is Ontario stats. So you have Halton. This is from Treb. We'll post the link again, and basically what you can see though is that what I like to look at is kind of months of inventory, right?
Okay.
So Burlington has 1.3, Halton Hills, the region, Burlington 1.21, Milton 0.8. So these are lower priced areas in Halton region, and Oakville being we have a lot of higher priced homes, right? So $2 million plus homes obviously take a little longer to sell. Which you're kind of seeing, and we're seeing even in that market that's dragging down the overall Oakville market. Yet first-time home buyers in Oakville, again, there's no inventory.
Do you know what's a normal months of inventory for these areas, like year over year? Is that
so
standard?
we're down probably, I mean, more than 50%. Like it's like last year was around 2.
Around 2.
1.5 to 2.
Okay.
So we have no inventory.
Yeah, and that's the big thing. So for anyone watching, if you're trying to predict markets, not that you can really predict anything, but if you see an area where sales are steady and inventory is down, or sales are high and inventory is trending downward, it's going to push prices up. So like if you're trying to get into a market and you see that trend happening, you could probably expect to see prices continue to rise.
Well, just to note, like my buddy's trying to buy a house in Oshawa. There was 50 offers.
Yeah.
There was 50 offers on a house in Oshawa.
That's brutal. See, I don't even get into that game. From an investor standpoint, count me out.
Yeah. Well, I mean, today we have 3 multiple offers happening on 3 different properties that we listed, right? So
yeah, that's my cue to find a new market to invest in.
Yeah. Well, me too. Which you guys, well, I mean, never mind. I'm not going to say that.
I think you should say it.
Well, obviously, my partner wants to sell our portfolio, so that's what we're doing. One of the offers we're taking today is on my 22-unit apartment building, and we'll have another 118 units to sell from there. So, yeah. So I'm selling 140 units right now.
Interesting.
And so when you say that, looking for different places to invest, I'm like, okay, well, now where do I take that money and where do I invest? And maybe it's Florida. I've been looking in Alberta. That's why we're going to start running some numbers on some stuff in Alberta.
I think Florida, Alberta. I'm actually going to Florida later this week, it looks like. Alberta, and then I think New Brunswick's a huge opportunity. Just because of price of acquisition, it's so cheap. You're buying under cost of replacement out there still.
That's fair. So I'll look out there. I've been looking out there. I just haven't seen anything I like yet. But you can see, so Central is 2.7. So Toronto West, obviously it's a little bit more expensive in the West than the East. And you got 1.1 versus months of inventory in Toronto. So you're going to start like everybody's predicting the prices are going up this year, except for CMHC. So I don't want to make that blanket statement. Yet everybody across the board is like 5 to 7%. Some people are as high as 20. And I personally believe that we're going to see a good 10% to 12% increase nationally.
Yeah.
And then you're going to see outlier markets that are going to do 20 again.
Is there really any reason to think you wouldn't get a repeat of 2020 in the 17% increase? I mean, our spending policy seems to be the same. Country's still locked down. If we still keep printing money and keep interest rates low, I just can't see any other path.
Well, that and the cost to build.
Cost to build, yeah, the other big one. Now, we may see lumber start to normalize. We had a big issue there. It was driving building costs up. But, I mean, as far as I'm in that business, and I just constantly keep hearing it, it's always up every year. Aluminum's up 20% this year. Lumber's up 30%. It just keeps happening.
Well, it's one of those things, though, once they get the price and people are normalized to paying it, why are they going to drop it?
Why lower it, yeah.
And here's the thing. So these are all predictions based on the government not being interventionist, right? Not coming in with some new stress test or new mortgage rule that's meant to cool the market, right?
Which they could do. Yeah, they're the wild card.
Yeah, 100%. So, I mean, you guys can see, obviously, like Durham, Ajax, 0.6 months worth of inventory. Oshawa, 0.7. Like, these are like minuscule numbers, right? Like, you got half a month's worth of inventory. So, in 15 days, if nothing new comes on the market, everything will be sold in the market.
That's so crazy,
right? Like that's unheard of.
This is why you have the bidding wars.
That's why you have 15 offers.
Yeah.
So, I mean, do you buy now or do you wait? Like if you wait, are you going to miss out on another 5%, 10% gain?
It kind of seems like you're gonna. I mean, as much as it's hard to resist. If you want to hold off or if you want to search for a new market, you just continually watch your market go up. But I go back to the fundamentals. I'm not going to do that for a chance that things were to change and there was to be an economic change that actually hurt our real estate market. If you don't have cash flow in there and you're buying as an investor, you're going to be in trouble if that happens.
Yeah, I'm just talking as a homeowner.
As a homeowner, I think, if you're committed to living in an area, waiting doesn't really bode well for you right now. It doesn't seem to, right? No one can know for sure.
Yeah. Well, best time to buy real estate was 50 years ago. Second best time is today, right?
Yeah.
Same with planting a tree. So the only people who are really winning are the people who are homeowners right now. Yeah. And that's where you're like, oh, so maybe what you do is you go buy and win in a 50-person bidding war, and then you take a 6-month close, and then your property goes up a heck of a lot. Who knows? And then when they did the stress test, people had done that and they got suckered on the other end, right? So buy where you want to live, or at the end of the day, rent where you want to live, and then go ahead and take the equity you're going to use and either buy investment properties or somewhere where you can make a gain that's greater than what you would have gained in the housing market. And the only reason I say that to buy a principal residence is because it's one of the best tax benefits you can get.
Yeah, you get the untaxed capital gain on your own real estate, or on your own home. So it's tough to pass that up. But a lot of people do just forfeit owning their own home because they see better opportunities in other areas to deploy that money. Yeah, and there's nothing wrong with that. But I mean, the negative is. As that market goes up, rents will keep going up, and it'll probably punish you in that way.
Well, at the end of the day, though, if you can't afford to live where you want to live, it doesn't hurt you to rent there, lock in your rent now, because let's be honest, it's only going to go up 2% a year, 3%, maybe 3% a year, right?
Yeah, as long as it was built before 2018.
Yeah. So, like you're basically, and a lot of people like have this mindset that they got to buy their house and then buy investments and rental properties. Where I'm going to tell you, sometimes it's just better to rent, because you can rent a heck of a lot nicer home for cheaper, and then you can buy cash flow with that same money that pays your rent.
And another big thing is, from a mortgage qualification standpoint, if you don't own your home, it can really help your mortgage application depending on how it's positioned.
All right, so that's the Ontario market. You were talking a bit about the Montreal market.
Yeah, I'd had some secondhand stats off there, kind of showing that it was pretty booming. Like, their prices were continually up all year, month to month. It would be great if it was easier to find information on this, but it's pretty much complicated.
It's so funny. Like the Canadian Real Estate Association doesn't have Montreal stats on there. It doesn't have Quebec stats. They're their own separate entity. It's like they're not part of Canada.
Yeah. They do sort of operate independently.
They do.
Yeah.
Comment down below if I've offended you. I don't know. But just subscribe first and smash the like button, or smash the dislike button twice. I mean, you were talking about New Brunswick.
Similar, New Brunswick, even in the comments from our last video together, people talking about how things are just trending upward because of the price point you're buying at. Yeah. I don't have the stats right in front of me, but just anecdotally, and I know that people are just flocking out there right now because of the opportunity it represents relative to other markets here in Canada.
Do you think it's because they have a little bubble there, so they're open? You can go quarantine there for 2 weeks and then just live your life.
Can you? So it's fully open.
Yeah.
I think that's twofold, because I mean, on one side, that's probably going to discourage some investors from coming because it's a pain in the butt. But then for those that are willing to, it's a huge advantage.
Yeah, well, I'm just talking about people who want to own a home there and live out there. I mean, if you think you can work from home, then,
Absolutely, yeah. And again, like if you want to live a life, if you can buy a nice single detached home for 150 grand and you can work from home, I mean, for some people, they could take their equity from here and they could live mortgage free. Yeah. And then they could just come to Ontario a couple times, a year if they have that arrangement with their boss.
Yeah. And though I've heard that working from home isn't going to be I was reading something about Google now saying that Google's saying, oh, well, the work from home is not going to be permanent.
Mm-hmm.
So, I mean, if Google's saying that and they're a huge technology company, then, are the banks actually going to do that? And all these other companies, are now all these people now going to flock?
Yeah, I don't think it's a permanent effect. I think that we're going to have a lot of people go back to work, but will it be a full effect? Will everyone go back to work? I don't think so. I think a lot of people are going to continue to work from home, but what percentage? Is it going to be 10%, 20%? But we were already trending that way before.
And with technology and Zoom and everything like that.
It was pushing it that way. So there is room for growth in those markets. And naturally, as more people go out to New Brunswick, there's going to be new industries that pop up to service those people, and it's going to become self-sustaining.
Yeah, for sure. And then, so I just have Nova Scotia up here, and it's the same trend. Mm-hmm. Active listings are down year over year. Yeah, it's the exact same thing. So days on market, months of inventory is lower. Obviously, sale price is up huge.
Yeah, and that makes sense, right? You saw that days on market's down. You saw that active listings are down, and surprise, surprise, we see that that prices are up because people still need a place to live. There's people still going to be buying houses, and if there's less inventory, they compete. And when they compete, it's really not actually good for the average Canadian. Like we need more housing supply in Canada, or we got to slow this immigration down. Otherwise, we're going to price our middle class right out of this market.
Well, and it's true for sure, right? So people blame investors like us that yet at the end of the day, if we're not building enough houses for the amount of people coming through, rental properties, single family homes. We need the densification, really.
If you want to blame, you look to who's slowing down the process. We have planning slowing down. Slow planning departments make it hard to get approvals. We have restrictions on areas where you can develop. We have government restrictions on goods coming into Canada, tariffs and taxes. These things all affect how cheap we're able to build, how fast we're able to build. Because if building becomes more feasible, more builders build more properties, and we all win because of that. Now, of course, we want to keep our naturalized areas. We don't want to destroy the green belt here in Ontario.
Which is densification, right?
Yeah.
Intensification of land already under use.
But I mean, being in this industry, I can see there are several instances of properties that are already being used residentially. And, say you go in for an application to sever and you're not being allowed to do that. I don't really see a downside if you want to build, 2 houses on 100 acres instead of just having 1. So there are some silly things going on there too.
Obviously. All right. Well, let's talk inflation.
Yeah. So the question is, what's going to happen, right? So for those who follow me, you'll know I talk about this a lot because I'm very concerned with this and what's happening in our market. If you have this many goods and services on an average year, 2020 would have been down here. 2020 was less goods and services, but the demand for goods and services hasn't really changed that much. So the demand kind of stayed the same. When you drop what you actually have available, in terms of goods and services, the difference is a price change.
Yeah.
So if we have the same amount of goods and service, or if we have less goods and services, but the same amount of people chasing them,
or more, because more people have more money because they're
getting more money, right?
Well, they weren't spending it on other things, and some people were just getting more money from.
Yeah. So the gap is price change. So we're naturally going to see our prices in the grocery store come up because it's kind of like in the real estate market. When you've got less of those goods and services, the people selling them just say, well, I guess we're going to increase our prices. Natural thing to happen. And the problem is this extra money that's being thrown into the government, you're paying people to stay at home. It's got to find a home. All those dollars got to find a home, and they're gonna be chasing the goods that you want to buy. So how far does this go when we've injected $500 billion of money that shouldn't be there in government spending?
Yep.
Now, when that compounds, it goes through the banking system, and the banks can do their fractional lending where they only keep $90 out of 100, or sorry, they only keep $10 out of 100, and they lend out 90. As that money circulates, this balloon grows, and that's more money chasing goods. So my question to you, Mark, is how does that affect real estate? What do you see happening? I mean, we saw huge increases in prices just from low interest rates, but now what happens when this inflationary effect starts to take hold?
Wow. So obviously, the government, I think, wants inflation. I think the government is going to allow inflation to creep up more than their 2% stated, which is what they want to have. They call normalized inflation.
Yeah, 1 to 3% is normal.
Yeah. So they want, basically they need to do that because obviously they run a deficit, right? So they run a debt. And so the more they inflate, the less they pay. I mean, at the end of the day, right? So, I don't think we're going to see German hyperinflation from the 30s or anything like that yet. I think they're going to let it inflate, 4.5%, which, again, all that does is, if wages aren't going up to meet it, then it decreases our buying power.
Yeah, and that's
over the course of time, right? So first, I don't think they're going to raise interest rates anytime soon.
That's my concern because that's how they control it. So then, how do they keep it at the 4.5? To me, I think that they have a couple of options, and one is just to let it run rampant. And when they do that, then I think we go north of 10%. And at that point, how do employers respond? Are they going to be giving employees raises every month? Like, do we get into that territory?
See, I don't think we're going to see 10%. I think basically what they've done is they're buying their own bonds.
Yeah.
So they're going to float those back out. It's what the U.S. did in 08-09.
Yeah.
After they figured out, we have to fix this. They did quantitative easing.
Yeah.
And that was they piled on huge amounts of money.
Yeah.
Huge, right? So I don't know that we're going to see the 10%.
Okay.
I'm not concerned about seeing 10%.
It depends on where the money goes, though. Like, if that money ends up in real estate, like you could actually kind of explain it through there, right? Because the basket of goods government says, are the government basket of goods. Are they including real estate in that basket, right? So that's one of those big things that costs us money every year.
Yeah,
but it's not being included.
There's not being included. So and with interest rates low, again, your cost to buy the property is less, right? Like your monthly cost, and that's what they're looking at, right? The basket of goods. They don't even include your mortgage or rent or anything like that in there. So I think they're going to inflate it 4.5% because they're going to control it. I don't think we're going to see 10%.
Yeah, but the control levers are interest rates, government regulation, and taxes. Yeah. Those are the things they can do to slow it down.
I don't see a world where they don't increase tax.
Yeah, so they're going to slow it down with taxes. Yeah, unfortunately, very unfortunately.
Yeah, it is what it is, right? Yeah. It's a privilege that we pay for to live in a great country called Canada.
Yeah, we'll see where it goes. I just think it's wise at a time like this to hedge your bets. I think real assets are great. Just in case, because we really don't know where this is going to go. I think gold and silver are nice things because they have a long history of holding value.
Well, it's a store of value.
It's an insurance policy. It's really inefficient. It doesn't do anything, but it does protect wealth. Yeah, kind of shiny. Yeah, it looks nice. You don't want to have a huge amount of that. Like I kind of hate having to invest in stuff like that because it's not really increasing my wealth, but it is protecting it.
Yeah.
Any other thoughts?
I think we've downloaded a huge amount of information on people this month. I think we can leave it at that. And again, if you guys smash that like button, let's get this over. Let's shoot for 20,000 views on this. So the last one was 10,000. I think we're going to hit that in the next day or two. So let's do 20,000 views on this one. Share it with your friends if you think we know anything about what we're talking about. And if not, share it with 2 friends.
Yeah.
Thanks, everyone. We'll see you guys next time.